Before I introduce Judy Baker, who will moderate our next panel, I just see, as I said at the top of my remarks, I knew with this group, people would figure out everything that I said that was wrong. And I'm going to just pick out two of them. I'm going to correct two things. One, actually, nobody said anything. But when I was referring to good work on measuring service flow of housing, a paper I should have mentioned was by Maria and Arthur that they allowed me to tag along on in thinking about. I'm trying to give everybody a shout out who I can to. But the other thing is my citation to Our World in Data, I learned, the person who is best and most eager to correct me is my long-term co-author, Steve Malpezzi. So, Steve, if you could just talk for about 30 seconds about Our World in Data.
Our World in Data, which is started by a German economist named Max Roser, and it's a fabulous resource on all kinds of comparative data across countries on economics, public health, demography, everything else. The other shout out would be to anyone who hasn't looked at the Gapminder website, started by Hans Rosling, who passed away a few years ago, but is continued by his son and daughter-in-law. Those two websites are, along with World Development Indicators, the World Bank site, is my third go-to. But the other two sites are, everyone needs to know them if you don't.
So, thank you. Okay, let's start with our panels. And the first one is the elephant in the room. Housing is an important economic sector. And it dawned on me a week ago that elephant is a particularly good metaphor because we're talking some about India and some about Africa in this country, and so, and we have Judy Baker from the World Bank to moderate this panel. We have a special guest who's going to be piped in from Europe, Deniz Igan. But Judy, let me ask you to introduce yourself in our panel. Take it away.
Thank you, Richard. I'm really delighted to be here. I am Judy Baker from the World Bank. I'm a global lead on issues of urban poverty and housing. And I also work as a lead economist in Africa on urban issues. So I've worked at the bank forever, and it's nice to see some of my colleagues, current and former. And then to my left, I have Jonathan Malagón, who is was the Colombia's Minister of Housing and Sanitation between 2018 and 2022, and he's now a visiting fellow at the JFK School of Government at Harvard. I have Shamika Ravi, who's a non-resident senior fellow in the governance studies at Brookings. And then we have with us on Zoom, we have Deniz Igan, who's the head of the Macroeconomic Analysis Monetary and Economic Department for the Bank for International Settlements. So today's session, we're going to look at this following on the presentations that we had this morning, looking at the relationship between housing and the economy and try to unpack that a little bit. I'm going to give you like a couple of slides that's just a framing. And then we're going to have Deniz come online with her presentation, followed by Shamika, and then Jonathan, and then we'll have time for discussion. So with that, maybe we can just pull up the slides. So I will start by saying that this presentation, again, it's just a couple of minutes to sort of frame some of the thinking and following on what we heard this morning from Richard and Vernon. So the work itself comes from a deep dive that we did at the World Bank. And again, my colleagues will know about that work. So we spent almost a year talking amongst the three parts of the bank that work on housing. So we have the urban and resilience group, which I'm a part of. And then we also have the finance folks working on housing finance. And then we also have the IFC that works primarily with the private sector. And it may seem obvious that we should always be talking to each other, but we don't. And so it was a really special opportunity to bring together thinking from very different perspectives to come up with a World Bank group approach that sort of incorporates how we think about housing and, again, its role in the economy. So I just, if we can go to the next slide, I just pulled out a couple of the slides just to highlight some of the framing. So we know that the housing sector provides tremendous benefits to the economy and to households and individuals. In the US, for example, represents 15 to 18% of GDP. We know that it leads to growth in construction materials and services and industries. We didn't get to hear Vernon's thoughts on property taxes, but we know that the revenue is significant and that property tax revenue pays for schools, safety, streets, sanitation, and other services. Job creation is huge. We know that it creates both direct and indirect jobs, and I'll talk about that in a minute. We also know for many people, especially in poor countries, but then also I think through COVID, we also saw that housing represents a dual use for shelter and income generation. So we think traditionally about people, some of the slum shots that you saw, people also have their small businesses in their homes. In some countries, overall, represents about 3 to 10% of employment is done from the home. In China, that can go as high as 25% of employment. These are some numbers from WeGo. And then we also know that home ownership can create a lot of opportunities for wealth creation. It unlocks access to credit for families and for small businesses. And home ownership will also protect and conserve assets and wealth creation, especially during old age. Then we also know that there's spillover effects. So there's evidence on each of these pieces, but better access to health outcomes comes from home ownership, especially if you have access to basic services. Clean drinking water, there are improved education outcomes, going back to that initial picture that we saw with the streetlights. If you have a home where you can do your homework and study, you can have eventually better education outcomes. Improved gender outcomes, there's some good studies on that, as well as energy efficiency and environmental benefits for, especially if you're investing in green housing. So going to the next slide, just to drill down a tiny bit more on these direct and indirect multiplier impacts of the housing sector. So, we talked about the housing materials, that create a lot of demand for them and, in fact, jobs. The tax income. So it creates more opportunities for taxes and job creation through the related services, through maintenance, through all that goes into utilities, through rent, consumer spending, and energy efficiency. And all of this is very much linked to the economy. And just to say, so I mentioned the numbers from the US, but we also have from Morocco, it's about 17%, almost 18% of GDP comes from the housing sector, and in Mexico, 14. So it's consistently, between 15 and 20% of housing sector contributes to GDP. And then the next slide, we heard quite a bit about some of the significant challenges. I don't probably need to go into them, but just to say, on the demand side, we heard about all the slum population, but the demand, especially in the countries where I work, is enormous. You have people moving to cities every day, and there's simply just not enough housing. When I'm working in Africa, the growth rates are amazing, and people end up squatting and creating eventual problems down the line. Affordability, housing costs are very high for people relative to what they can afford. And a lot of what is being built is for middle-class residents and not reaching the bottom end of the income distribution. And then on the supply side, you have a lot of the issues around tenure and security and the challenges in countries related to permitting and regulations and making it very difficult to construct housing. So finally, last slide, just to say that through this process that I mentioned, we developed an approach which is meant to look at both the supply and demand side on housing, and I won't go through all of it. I just wanted to, because I think we're going to hear a little bit about what's happening in specific countries from our panelists, but I just wanted to say that you can see that there's a lot to it, and it's a very complex sector that reaches many, many other aspects of the economy. And there are some cross-cutting themes that are extremely important as well, that maybe don't always get as much thought in the sector, although I think that's changing, but things around green housing, resilience, some of the emerging technologies, some of the gender aspects, and these are things that, again, it just adds to the complexity, but also offers opportunities going forward for the work that we do. So with that, I'd like to pass to Deniz's presentation, which is going to be by video. And again, she's joining us by Zoom, so we'll have opportunities to ask her questions.
Hi, everyone. It's great to be here today in this very interesting conference on a very important topic. And as the title of the panel says, the elephant in the room is housing, a very important sector of the economy and very relevant for the way the economy behaves, both in the short-term business cycle frequencies, also in a structural way in the long term. Before I start with my presentation, the usual disclaimer applies, and the views expressed here are mine and do not necessarily represent those of the BIS. So before the financial crisis in 2008-2009, macroeconomists argued that monetary policy and broadly any macroeconomic policies should focus on inflation, and they should focus on the output gap. Housing, along with other asset markets, other assets in the economy, would be a concern to the extent that they affected GDP and inflation. But if they didn't, then they would be a direct concern for policymakers. Obviously, the global financial crisis then was a wake-up call that such a black box approach to housing is flawed, and we need a deeper and more granular understanding of how housing markets work, how mortgage markets work, and how they relate to the broader economy so that policies can respond accordingly. Now, I will try to go over what has changed in the macroeconomic approach to housing in the past decade and a half since the global financial crisis. What has changed basically is acknowledging that housing is special. And housing is special because of various reasons, and let me walk you through those. First, housing is a very leveraged sector. And what I mean by that is multifold. Consumption of housing is leveraged, investment in housing is leveraged, and the financing of housing is leveraged. It is unheard of that a bank would lend hundreds of thousands of dollars for purchasing a financial asset to a household, but they do that regularly for acquiring real estate, for buying houses. So in that sense, it's a very leveraged endeavor for households to ask for a mortgage and buy a house. And it's not only households that consume housing that the process is leveraged, but it's also leveraged for the developers that build that house. They also go to financial institutions and get large loans in order to buy the land, improve the land, and then buy the raw materials and finance the construction of properties that they sell. And finally, the financial players, the major financial players that are involved in real estate financing themselves are also leveraged because they tend to be banks in many countries. and banks are more leveraged in their structure than other financial players are, such as asset managers, for example. The second reason housing is also special is that it's a large storage of wealth. If you look at across countries, you will see that housing in percent of total assets of households or their in percent of their net worth, it often exceeds 50%. And these financial aspects of housing make it an important sector when it comes to macro-financial linkages. And you can see that in crisis and as well as the strength of how housing developments affect the rest of the economy, something that I will come back. The other reason that housing, aside from its financial properties, the other reason housing is important and special is that it has major supply side effects. Thinking in an input-output kind of way, when you buy a house, you just don't stop buying the house. Then you need to furnish it, you need to maintain it. So you need plumbers, you need painters, and if you want to sell it, you're going to need to contact a real estate agent. All these processes mean that the consumption of housing, investment in housing, then has direct implications for other sectors in the economy. And housing is also special because it has significant frictions and substantial network externalities because of those frictions. What I mean by that is that spillovers from housing are generally nonlinear because you cannot sell a portion of your housing, a room or say X%, as opposed to if you were trying to liquidate your financial asset portfolio, you can sell really X% of your portfolio. You cannot do that with housing. And houses are unique in terms of their location and in terms of the improvements that's in them, in terms of their style. So any information in the housing market as to what the value of that asset can be very opaque. And pricing can be very tricky, leading to speculative bubbles and other sort of frictions. Which again, all means that when something happens in housing, it has nonlinear effects on what happens in the rest of the economy. And last but not least, housing has social welfare implications. Homelessness is something we all care about, policymakers care about, much more than, say, limited stock market participation of households. And being overburdened by housing costs can also be a problem as it takes away from other consumption and investment. And you can imagine that that could be an issue in many countries, especially more recently. If you were to look at the share of households overburdened by housing costs, which means spending more than 40% of their disposable income in order to have a rental or to own a house through a mortgage, is very high in many countries. On average, 40% of poor households are overburdened in order to maintain their housing, which means that takes away from other types of consumption. So what we learned as macroeconomists is we need to think about all these reasons housing is special and find ways of integrating these qualities into our workhorse macroeconomic models. Now, where are we today is that we need to think of housing both as a consumption good and investment good in our models. And how do we do that? We need to understand that house price cycles and what happens to housing has direct implications for the decisions of different agents in the economy about their different activities. Taking house prices here in the pink circle, you can think of just right away what it means in terms of net wealth for households. In order to, for example, start a business, they may need to put it as a collateral to get a business loan. So this housing as collateral has implications for financial sectors, decisions in terms of how much new loans to provide to developers, how much new loans to provide to households in the form of mortgages. And what happens to house prices also has implications for what happens to housing demand, whether households would be able to afford higher priced homes. And then it has implications for housing supply, whether it's worth to borrow on the side of the corporations, the developers, in order to build more housing. And all this then come in the decisions of investment in the form of residential investment, but also non-residential investment, because housing is collateral also for corporations. It has implications for housing consumption, but also non-housing consumption decisions because of how much of their disposable income households need to spend on housing, or how much they need to be burdened with new mortgages, which all at the end adds up to the economic activity that we see. And this all happens in a legal framework that recognizes housing as collateral, and property rights come into the picture, and how housing in different countries then feed into economic activity in the business cycle frequency. So what happens then, shocks to housing become systematic, in the sense that they lead to movements in economic activity directly or through the financial linkages that I summarized. And the global financial crisis is an obvious example. And what you see here is, whether you look at it during the boom period that we witnessed before the financial crisis, or the bust that we observed after the financial crisis, there is a relationship between what happened to house prices and how much households were able to consume. You see the blue dots, where house prices increased much more, consumption exceeded its normal values much more. And in the red dots, you see that when the bust came and house prices dropped, you see that consumption dropped much more as well. Now, this is one episode, but historically, when we look at different episodes of housing booms and then credit booms, how they were financed, the housing booms were financed, what we see is that 90% of housing booms that were accompanied by a credit boom ended up in a systemic financial crisis or significant growth slowdown, attesting to the systemic impact of housing sector. Now, beyond the business cycle frequency, housing can also influence the structure of the economy through allocation of resources, through its impact on productivity and potential growth. How does that happen? Well, construction sector is actually quite labor intensive, and it has low productivity growth potential. What that means is that during housing booms, when construction sector absorbs more resources, it takes away from potentially high productivity growth sectors. And recent research has shown that resource allocation could result during construction booms, during housing booms, and this overextension in construction has implications for the allocation of resources in the economy and its growth potential. And issues in access to affordable and adequate housing also has implications. And this is in a longer term perspective. Let's take urbanization as an example. Now, as economies move through the income ladder, we see an increase in the share of urban population in total population. And this type of agglomeration has its benefits because cities bring together different workers, they are diverse, ideas travel faster, innovation happens faster. These are all positives for productivity. But at the same time, this urbanization process can come with risks, most notably in the form of overcrowding or lack of infrastructure. And this can ultimately also have implications for health, for productivity, and again, allocation of resources. And there are, of course, huge differences across countries in that respect. For example, most low-income countries today are at the urbanization levels that emerging market economies were almost 50 years ago. So different countries face different uphill battles in that respect. Finally, the political economy of housing is very complex because of the reasons, the social reasons that I mentioned. Policymakers cannot leave housing on its own, and unfortunately, most times the easy solution is to subsidize access to housing finance, which could backfire or amplify the relationships and the link to crisis that I talked about. Whereas more sustainable investments, more sustainable solutions to provide affordable and adequate housing may be politically painful to take. Let me stop here, and I look forward to the discussion.
Deniz, I think you left us with sort of indeed one of the biggest challenges around political economy, and I think it reverts also to the point that Vernon made about the challenge with institutions making the work that we do so complex. So with that, I'm going to pass over to Shamika, who will now present live. So,
thank you. Thank you, Judy. And thank you, Richard, for the invitation. Thank you all for your time. It's a great honor to be here amongst you. Well, my title is Housing is a very important economic sector in India. And the reason I put an emphasis on very, thank you, is because, well, first of all, few things have happened in the last 2 years since the pandemic. It has been reflected also in terms of the government's policies in recognizing that housing is a very important sector. For the first time in 75 years of independence, India actually has a planning committee, a city planning committee. Most of our cities were organic. They really have not had much planning, and I'll talk a little bit about that. So that's number one, and that committee just got announced a year back. So that's number one. Number two, because the financial markets in India are not very well developed, so there aren't enough savings instruments available with households. So what we end up doing, and you know how Indians are notorious for their love for gold and real estate. Most of Indian savings end up in the form of gold and real estate. And in recognizing that reality, the government is therefore coming up with gold policies and real estate policies that match this. And of course, a lot of it will be linked to, therefore, the property taxes and better property rights and so on. But that reality has finally sunk in. That's number two. Number three, outside of agriculture, real estate is the biggest jobs creator in India. And we have a very large population. We have a problem with skills. Construction, in particular, is relatively low or semi-skilled, the way it happens in India. Therefore, this sector is seen as a major sector for job creation and absorption of that excess labor force. Fourthly, you know, the pandemic as an important fiscal policy, digging ourselves out of the growth slowdown because of the pandemic. Real estate is seen as a very critical strategic sector in terms of a strong fiscal policy, how we're going to get out of that. So let me start by basically saying that it's not just an important economic sector, it truly is a strategic sector if you consider India's very large labor market. It is, the sector itself is expected to be 13% of the GDP in another 3 years. By 2030, it is expected to be about $1 trillion US. India is going through very rapid urbanization. In fact, the official statistics claim we are about 35% urban, but official statistics are more than 12 years old. And 12 years in a young, dynamic economy such as India is a very long period of time. If you look at Nightlight's data, and these are different published works over the last 15, 20 years that we've done, India is anywhere between 60 and 67% urban today. Because a lot of that growth is happening at the periphery of not just big cities, but outside of the villages. There are lots of semi-urban and peri-urban areas. And therefore, there's a new term called rurban, which is gaining popularity in the policy circuits in India. The recognition that a lot of planning, in fact, when we talk of housing, traditionally what we've thought of housing is almost being challenged in India because the changes are happening incrementally. Toilets are getting built, We built 100 million toilets in the last 7 years. Piped drinking water, which means it's not housing traditionally the way we've thought of housing, but bits and pieces of what construes good housing, which is being expanded as we speak. Housing is also seen as a very important tool for social development, and I'll dwell a little bit on that. Then, of course, it is one of the largest FDI attractors. The foreign direct investments coming into India, a very large part of it is in the real estate business. And again, in recognizing that reality, we're going to see a lot more policies. The graph to the left is showing the share of house loans in bank credit, which has increased significantly in the last few years. So if you just look at the financial sectors and the banking sector in particular, houses are a very major reason. And again, here, a lot of the traditional microfinance literature, you know that loans don't happen because you don't have collateral. Houses, and a little bit on the property cards, if you have house titles, even if it's in an informal sort of way, does expand access to capital. And that is happening, again, in a very large scale right now. The right side graph, it shows the dependence on different states in India. Indian economy should really be understood as 28 state economies, because a lot of the policies are local state level policies. These are provincial policies. These are not being driven from Delhi. So you have states where 20% of the labor force is engaged in real estate business, in different forms of construction, et cetera. So it's a very, very important sector strategically. If you look at the major reforms in the last 8 years, and I talk of 8 years because that is since Prime Minister Modi, a lot of changes that have been happening. One of the biggest is this policy called Pradhan Mantri Awas Yojana, which basically is housing for all. 20 billion affordable housing have already been sanctioned. Of that, around 10 million have already been built. But that, again, is getting expanded in a big way. The second is Swamitwa. Swamitwa is basically, it stands for village mapping. So there is a very significant fundamental exercise which is getting implemented today in India, which is mapping of properties. So they're using drone technology, and of course, with the help of the local courts, creating property cards. Because a lot of disputes happen. In fact, most disputes are property disputes between family members. So the creation of residential property cards and land records is seen as a way for not only ensuring more trade, but also reducing the huge burden that the courts have today, which is in the form of disputes. And very interestingly, a very large number of those disputes are between the state and citizens. So land titles are heavily disputed, and the property cards are seen as a way of resolving a lot of that. In fact, last month, a very significant number of disputes was settled because the government basically, forsook its claim on a lot of land. Now, in terms of, this is the data which basically shows how across Tier 1, Tier 2, Tier 3, and Tier 4, these are different sizes of cities. If you look at what is happening to number of female borrowers across these cities over the last 3 years, and what you see is a very significant increase in female borrowers, and particularly in smaller cities. And these are mostly against housing. So what you're seeing is this kind of program with house ownership is leading to a very significant increase in access to credit, particularly by women, and that too in the smaller cities of the country. Now, again, the microfinance literature, mostly from South Asia, predominantly from Bangladesh, has very well established the fact that when women are financially empowered, it has very significant social impact beyond the economic impact. So this goes to the point that Richard was talking about in his opening remarks, that is this a social tool or is there economic growth being generated? I would argue, given the data more recently from India, we do see that having access to properties, documents, having access to housing is leading to a very significant increase in financial access by women in smaller towns of India. Now, these are some of the policies that have been enacted in the last 7 years. One is, and of course this is all meant to boost the housing for all policy of the government, which is the Awas Yojana. One is the Reserve Bank of India, which is a central bank, has a regime now. It's not one or two policies. There's a policy regime which basically has been promoting low home loan interest rate across different institutions and instruments. So housing loans are cheaper across different kinds of formal financial institutions and even semi-formal ones in the form of non-bank finance companies. Affordable housing, there is creation of a very large number of units. They used to be concentrated in the western part of the country, Gujarat, but today it has expanded to many other areas, including the east and the southern parts. There is finally a rental policy that has been enacted just 2.5 years back, and there is an affordable rental housing complex part of that law, which basically is the creation of rental properties for the poor. This is one of the very few sectors in India which allows 100% FDI, foreign direct investment. Again, in recognizing that a lot of the flow in the last 10 years have been in this sector, and it is having very significant externalities, particularly in the form of jobs and financial inclusion, etc. And then finally, tax relief for real estate developers and home buyers. In fact, there is a natural experiment which is underway around the national capital region of New Delhi. To the west of Delhi, west and south, you have a city called Gurgaon, which is in the state of Haryana, which is one city. And to the east and the eastern part of Delhi, you have a city called Noida, which is in the UP, Uttar Pradesh part of the country. Now, UP is one of the poorest states in the country. Haryana is one of the richest states in the country. They are both adjacent to New Delhi. These are both cities that are 20 years old, but they are very different. And that, therefore, I mean, there have already been a series of papers, but I welcome the economists and the empiricists in the room to study these phenomena because they truly are natural experiment. Gurgaon is a completely private city. In fact, Alex Tabarrok from George Mason University has a very interesting paper which shows that the creation of private city when the state is basically absent. So you have not just the housing, which is private, but the roads are private, electricity is private, security is private, solid waste management, sewerage, it's all privately done. Noida, on the other hand, is a very well-planned city. It's beautiful. It has huge, broad roads, very green. The problem is that it hasn't gotten much investment in the last 20 years. So it's beautiful, but it is not growing. Gurgaon, on the other hand, has grown very well because the initiative was taken mostly by the real estate developers. It's a DLF city. It's a private city. It's grown very, very rapidly. Outside of Bangalore, it is the second largest IT hub of the country. But it is maxing out. We are seeing a slowdown in growth there because the absence of planning also creates ceiling to growth. There's only that much that the private developers can do on their own. And very interestingly, going back to the point of governance and regulation, Indian policy making, particularly when it comes to land and housing, et cetera, is almost a decade and a half behind the real economy. The economy is growing much faster than what the regulators have an understanding of because there isn't that kind of real-time data available. And it is reflected in the form of governance. In fact, Gurgaon, which is an IT hub and it used to be called the Millennial City, used to be governed under what are panchayats. Panchayats are village councils. So basically, it did not have a municipal corporation or a municipality. It did not have an urban local body until 14 years back. It has only gotten recognition of a city just 14 years back in the form of an urban local body. So that just tells you that the real economy in India, in many parts of India, is growing very, very rapidly. Governance has a catch-up game to play right now. And governance not just from the policy making, et cetera, or the regulatory perspective, but also in creating those fundamental public goods which can lead to greater growth of such cities, because clearly the growth avenues are there. It is an IT hub. It is one of the biggest job creators around, in the northern part of the country, and yet there is a missing government apparatus there, which is creating the ceiling. So with that, I come to an end. I'm very happy to take questions by the end of the session. Thank you, Judy.
Thank you, Shamika. I think you gave us a very rich sort of overview of such a complex economy and sector in such a big country. So thank you. You packed a lot in, and I hope we'll have a chance to follow up further. So with that, over to you, Jonathan.
Thank you so much, Judy. And thank you, Richard, for the invitation. I feel absolutely honored to be here in this panel, in this conference, in the middle of outstanding colleagues. And I have to start with a disclaimer. You are all expert in urban planning, and mine is the voice from policymaking. My doctorate is in monetary policy. I used to be a banker. I used to work in the Banker Association, but I spent the last 4 years of my life as Minister of Housing, Cities, and Sanitation of Colombia, and I want to share with you our experience, what we did, what worked for us. And let me start with the central question, central and elusive question of this panel. And Richard said that how important is the housing sector? How to approach when it comes to measuring the economic importance of a sector, how to do that? The first intuition is with size. What is the size of this sector in the economy? Judy said that used to be from 15 to 20%, and in Colombia is especially low. In Colombia is 8% of the GDP in the housing sector. But when we go to the labor market, in the labor market is extremely important. 1 of each 5 jobs are created in this sector. This sector takes the 20% of the employment in the country. But to be honest, the 2 indicators I like the most for measuring, for assessing the importance of a sector are related with national accounts, are related with the inverse Leontief matrix, and one of them is the multiplier of the investment, and the other is the Rasmussen-Hertzman index. The multiplier gives us, for each dollar invested in houses, how many dollars we create for the whole economy, and the Rasmussen-Hertzman index gives us the spillover effect that Judy said. The spillover effect is how we spread, what is the dispersion of the fiscal impulse in the rest of the economy. And let me show that. In the Colombian case, the first sector in terms of multiplier is housing. The main sector. And for the second indicator, for the Rasmussen-Hertzman index, the first sector in the backward linkages is also the housing sector. So housing sector is extremely important for Colombian economy, is the one that have the capacity to create more wealth and at the same time to spread it in different economic activities. That is extremely amazing. And that is amazing because when we had the challenge of dealing with the COVID crisis, this sector, because of that, became the leader, the central key, the key element of the countercyclical policy response. When we started discussing where to put the money to increase, the economy, to boost the economy in the middle of the largest challenges that we have in our generation, the main response came from housing sector. Housing sector had the chance to rapidly recover the employment in the country, but also to boost the economic activity and to spread that in different economic sectors. I will start by the conclusion. Let me say that we did relatively good. We spent 1 point of the GDP per year. That is an extremely large fiscal impulse. 1 point of GDP was increased in our budget in housing, and as a result, we we had the chance to put Colombia as one of the leaders, not only in the Western Hemisphere, but in the world, in terms of housing sales per billion inhabitants. I like to compare that because it's a good way to show what we did, but also what I want to spend my time, the minutes I have, is showing how we did that in order to be sustainable in time. I love this map. This is how many houses, new houses, are we selling per year in the country. We only have data for 75 countries in the world, but in this sample, Turkey used to be the leader, but in this sample, Colombia is the first or the second. In any case, it's in the tier 1. It's one of the countries in which people are buying houses the most. I have a very short video of 20 seconds to show that. And we were recognized with the Scroll of Honor of UN Habitat, and we were recognized as well as the country with the world, something like world champion of affordable housing, the country in which we are creating more affordable houses compared with our population according to UN. And I'm so happy to see here Dr. Marja Hawke-Smith, because many of the innovation that we follow during the last 5 years are extremely related and inspired by your papers and your academic research. First, we migrated from a supply side to a demand side policy approach. What does it mean? We reduce the free houses neighborhoods. The blue dots are the free houses that we used to build in Colombia. We used to build, as in every single country, Shamika, it's happening in India, it's happening in every single emerging economy, the neighborhood of the poor of the poorest. You know, it's a kind of segregation, with good intention, of course, but it's a kind of segregation. And we gave the subsidy by default, and we let the people to decide where to live. And the result is the one that we see in the red dots. And I love these maps because you can see there are a lot of points, a lot of dots in red. But it's not only about scale. It's also about where people is living. People is living everywhere. People decide to live in a different place that far from downtown, and the circle is downtown. So people is living now closer to downtown first, and second, we have a larger scale, and that is impressive. Second, we redefine mortgages. And I have to say that a house is not a good collateral. Is not a good collateral at all for a bank. The worst that a bank can face is, taking a house, because they need to go to a clearing house in order to bring back that money to the balance, and they used to destroy EBITDA. They always used to destroy EBITDA when they take a house. So it's not a good collateral at all. And one used to think, oh, the bank always wants your house. No, the bank never wants to have your house. It's the worst business ever. So we created a new collateral, a guarantee fund for the poor of the poorest. Every single Colombian with less than 2 minimum wages of income that wants to buy a house, they have a collateral, and the collateral is the government. We create a guarantee fund for them. We changes the loan to value, the debt to income, we changes the down payment subsidy. We are a good student, and we follow the most of the recommendation, but we also, I used to be the vice president of the Banker Association, And once I became the minister, I was 33 at that time, but we increased the number of players. And we passed from 17 banking institutions to more than 400 cooperative and employment funds, and almost every financial institution in Colombia is now able to give a mortgage. So increasing competition was great, increasing the number of players, and changing the most of the parameters for mortgage. And that is the result. We increase in just 4 years more than 60% our portfolio of mortgage. That's amazing. It's what we did in 15 years. We replicate that in just 4 years. I have to say that with this we are moving the frontier of the housing market, but with this new rhythm, Colombia will duplicate the number of houses that we have built in 202 years of history in the next 4 decades. In the next 4 decades, we're increasing more than 50% the balance. It's not the flow, it's the stock. The stock of mortgages in the country is increasing 64% in just 4 years. And I want to always show the non-performing loans because there is a financial stability consideration. Probably you are creating the new crisis. Who are you lending that money? You have to be careful. We are moving to Basel III standards. My colleague in the panel is in the Bank of International Settlement, the Basel III standards, and we are aware of that. But let me say that these people that are having a mortgage now, the poor of the poorest, are the best client that the financial sector have in Colombia. The non-performing loans of them are less than 3%. They are paying best that the richest people in Colombia are paying. They are doing extraordinarily good. Third, we could target effectively the program. That is something extraordinary that comes with the demand side program. You are putting money, you are putting down payment, and you are putting a subsidy in the interest rate, and you can change the parameters in this population that you want to move the most. And we wanted to move them off the women first and the young people second. So we put differential parameters for these two populations, and as a result, 60% of the subsidy goes to women, and 42% of the people buying houses in Colombia are younger than 30 years old. And they are still poor, receiving less than 1.5 minimum wages per month. So that's good because we could target this effectively. The higher the income of the people, of course, the lower the help and the subsidy provided by the government. This is the basic principle of progressivity in fiscal policy, with an exception. The only exception we have is for the greenhouses, the houses that has a certification, H certification of any certification to be sustainable. They receive an extra subsidy. That's the way to, as the Economist said, to internalize the positive externality of the greenhouses. And as a result, this program was extremely good because more than 70% of the money goes to people receiving less than 2 minimum wages. So this is the sector, this housing is the sector with the capability to concile the social policy goals and the economic activity objective. Finally, we also went to the qualitative deficit. Professor, I heard you carefully, and slums in Colombia are increasing as well. Actually, are increasing in the world. In Latin America, slum population living in a slum is now 21%. That is too high. It's more than 240 million people. It's like a Mexico. An entire Mexico is equivalent to the people living in a slum in Latin America. So we are not only promoting the building of new houses for poor people, but also trying to improve with the same, this is the same recipe. titling, improving the neighborhood, and also housing improvement. And we did more than half million people in 4 years. And finally, it would be terrible if we are not working at the same time in land availability. Can you imagine putting 1 point of the GDP in one sector with a supply constraint? The result would be the increase in the land price. So we are forced from government to try to move the frontier of this sector, but at the same time working hardly in expanding and making easier for the municipalities the land availability. And we did something like 16,000 hectares. That is a lot. This is something like the 8% of the 10 largest cities in Colombia that are large. Bogotá have 10 million inhabitants. So we are paying from the central government the studies for land availability in the municipality that they don't have when they don't have the money. We went to the Congress and we created the housing law in order to make easier the land planning in the municipalities, and we spent a lot of time and a lot of money and a huge part of our head count in the ministry working on that. And finally, this is what we advanced compared with our 2030 goals. But I want to criticize myself because this is a working paper that Judy, we have the first draft with a colleague of you, Luis Tribeño. It is amazing, and we put all this is like the toolkit in housing for rural, professor, for rural, for urban, for qualitative, and for quantitative deficit. And we try to assess, we try to evaluate in 4 different dimensions, in depth, in cost efficiency, that is not the same, depth and cost efficiency, in sustainability, and in progressivity, in promoting equality. And this is a methodology that we are proposing with World Bank, for World Bank actually. You hire us for that, and can be replicated in some other countries, but I want to show the result of Colombia, because although we were the country in the world with the highest, the world champion of the affordable housing, at the end of the day, this is an complete revolution. We still have a lot to do because we need to move to other kind of instrument, other kind of tools, especially for the rural and for the qualitative deficit. The experience that we got moving from supply to demand can be replicated in qualitative. India is doing that. India is creating a guarantee fund for having a credit with microcredit, actually, that is amazing, for improving houses. For improving houses, so it's not a centralized solution. Sri Lanka is also doing that, and we can try to do that and implement that in Latin America. Peru, here we have the former Deputy Minister of Housing of Peru, my colleague Rodolfo, and friend Rodolfo. Peru is starting to think in that, and just to finish, 3 ideas of what we still have to do in the case of Colombia. The first is that sustainability is an agenda that we embraced recently with this subsidy to sustainable houses, and is working good for the affordable houses, but we need to increase that subsidy and move that to every single intervention of this sector. That is a must. That is a must. And we only have the tool in the new houses. and in the affordable. We need to move in that. The second is that we consider, Luis and Triviano and I, that in terms of progressivity, the programs are well designed. So the problem is not targeting. That is extremely easy to target. It was my experience from government. During these 4 years, I was surprised how easy it is to target the housing policy. The problem is not targeting. The problem is scale. The problem is scale. So we need to focus in this budgetary constraint and the political debate in order to show that this sector is that important that deserves having more and more and more and more money in order to make deeper the program. And finally, the second one, that in this case is the last one, is that we still have the chance to take advantage from the experience of all the emerging world, because we check all the modern and the new urban agenda and all the modern housing policy in the emerging economies, and we have seen in the emerging world how this demand-side program are doing better now, are doing better not only in cost efficiency, but are also doing better in terms of justice. You know, now that you show South Africa's case, you can build post-apartheid some houses for the people and put all of them together in one neighborhood, 1.5 hours from downtown. Or you can give them the opportunity to decide where to live. And this experience that also give the people the freedom to choose what kind of intervention they want. You can move that not only to new houses, but also going, for example, to qualitative deficit. And that's a Colombian experience, and thank you so much.
Thank you, Jonathan. I think, again, you know, the innovations in Colombia are always astounding, and I was really happy to hear a lot of the work that's been done and the remarkable progress that you're making. So thank you. So we have, I'm going to steal about 5 minutes for questions, if it's okay. So we do have quite an online presence, and we've had some questions online. So first I'm going to take a question from online and kind of adapt it a little bit.
And is Deniz on with us?
And Deniz, I believe, is on, and I'm hoping Deniz can come in to respond maybe first. So the question really is about, so it was about decentralization, and the question relates, as it relates to our panel, is about how decentralization policies can affect this relationship between housing and the economy. And I heard a little bit from Shamika on the states and what they're doing. I heard a little bit about what the municipalities are doing from Jonathan. So it would be good to reflect a little bit, and it relates to the broader discussion we were having about political economy and governance. So it would be good to reflect a little bit about that sort of relationship between national and local, and how it then relates to what we're doing on housing in the economy.
I think decentralization works, at least as far as India is concerned, it works very well. And the reason I say this is, you know, the experiment with land reforms have been very varied across the country. In fact, if you just map the way growth is happening and you look at local laws, and land laws are a very large part of those ease of doing business reforms and regulations we look at. It is very strongly correlated with the ease of doing business. So the more business friendly, the more, the better, the easier the regulation, those states are doing very well. The flip side of it, though, for a large democracy is that we're also seeing a divergence in growth. One of our most developed states, if you look at human development indicators, but not growing very fast, is Kerala in the south. It has excellent human development indicators, but it's elected a communist government, which basically has very strong labor unions, et cetera, which means the general business environment is not as friendly. Now, in a situation like that, the states are competing for these businesses. So you've seen a lot of relocation of business away from these states to other states which are more friendly. So while decentralization works, from a longer-term perspective, I think democracies, one like India, we do have to worry about greater divergence, because that beyond a point is not very sustainable. Thank you.
In my opinion, Judy, the tragedy, but at the same time the opportunity for policy making in housing is that you are planning the housing policy in the central government, but you are implementing that in the subnational government. So if you are not that clear in aligning incentive, you will never have and you will never see what you are planning in the city. In our case, we had a goal, 800,000 people buying houses in 4 years. A lot. That's a lot for a country of 45 million people in population. And we could eventually reach that goal in Bogotá, Medellín, Cali, Cartagena, Bucaramanga, and Barranquilla, the largest cities of Colombia, or we could spread that in more than 400 municipalities. How can you do that? Giving the incentive to the municipality for land availability. And these incentives are basically fiscal, and are fiscal from the expenditure and also for the tax revenue. And from the expenditure, in our case, for example, we put money for fiscal infrastructure, parks and schools and hospital, and we prioritized the municipalities with the largest level of land availability. So you are creating the land in order to have new houses. We will help you with the infrastructure and the public goods you need in order to make them sustainable. But it's not only about the expenditure, it's also about taking the fiscal revenue. For example, in some countries, the tax incremental financing is going to the central government, and that's not good. They are supposed to be in the municipalities. The municipalities, they need to capture the new value of the land for their own management. So in our case, we gave the municipalities the opportunity to conduct that kind of credit. World Bank help us structuring the TIF, the tax incremental financing, for example, and we gave them the permission by law and the support from the central government to start proving these new tools of financing. So, in my opinion, there is the big challenge of policy making, but there are many ways to put incentive aligned in order to implement what you are planning from the central government in the municipalities.
Thank you. Deniz.
Absolutely. And actually, that would be a preferred solution to solving the problem of housing affordability, right? The criticism, as macroeconomists, criticism they have generally for housing policies is, generous subsidies that encourage borrowing for housing finance are not very well targeted. Right? And they tend to be very centrally managed, come mostly from central governments. There is some moral hazard issues, selection issues, and risk-taking, excessive risk-taking that happens. And it doesn't necessarily come at the benefit of providing the help to those who actually need it. So in that respect, and housing is all about location. Having more targeted policies and decentralizing housing policy decisions, housing supply decisions, housing support decisions is something, at least from a macro perspective, is something that would be preferable to the other alternatives that's out there.
Great, thank you.
So I thought of asking this question of Jonathan, but actually I could ask it of anyone, because I think it applies to the US, to a lot of the countries that Deniz is looking at, BIS. A lot of the mortgages, I thought of you because you had a chart up with some of the mortgage rates, and you made those mortgages at a time when Colombia had succeeded in bringing inflation down to, from what I see, like 2 or 3% or 4%. But now inflation's hitting 10% in a lot of countries around the world, in US, Colombia, and many others. And we're not in 2006. We've presumably learned a lot of lessons about underwriting, mortgage design, and so on. But given the increase in inflation and possible risks of recession, how do you see the robustness of the mortgage system over this short-run period that we may well be seeing, given inflation and other risks in the system? And I would point to you because you had the slide that jogged me, but anybody that has a thought on the panel, I'd be interested to hear it. Thanks.
So maybe we can each take 2 minutes to respond so everyone has a chance. So Jonathan, please go ahead.
Okay, 5 years ago, the interest rate for mortgages in Colombia, on average, were 11%. 11%. 5 years ago, 11%. 2 years ago, it became 7%. And now is 14%. So it's not good. We are dealing with this inflation increase, but it's not terrible at all. And it's not terrible at all because this sector, and you all know, is different for the commercial banking. When the short run is important, the reference in terms of the cost of the money is the long run investment. The long run investment is the public treasury, the Colombian treasury bond. And the Colombian treasury bond has increased in 100 basic points. Although we will see a slowdown in the short run, I'm completely sure that Colombia expectation of inflation is in 4% for the next 2 years. So what I think is that although we will have an increase in the interest rate, in a couple of years, they will reduce when inflation is reducing, but also we are doing good because the Colombian treasury bonds have not devaluated so much. So again, our reference for the long-term investment, the opportunity cost for the long-term credit is buying a treasury bond. And the treasury bond, the opportunity cost investment have increased, but not that much. So I think that we will see a slower market, but in a couple of years, maybe 1.5 years, we will have the same level that we reached during the last 24 months.
Thank you. Shamika?
So inflation, Steve, is not as much of a problem in the Indian context as it is if you look at the other OECD. In fact, currently we are very much within the bandwidth of 2.5 to 5, which is what the Monetary Policy Committee of the Central Bank considers in its inflation targeting numbers. So we have a little bit of energy inflation, but that really is more of a short term. So inflation is not a big concern, but I think the concern here is that a very large part of housing market used to be cash driven, which means it was not part of the formal economy the way it is measured and understood. It's very much cash transactions. It's all informal, and it's done outside of the registered sort of a system. And India did devalue its large currencies about 5 years back, and it was a blow for about 2 quarters of the fiscal year, but it sort of caught up very quickly, and we're seeing a very rapid formalization and sort of a digitization of a lot of real estate contracts. So we're not facing the same set of problems, I think, that the US or the other OECD markets in terms of inflation are.
Thank you. And Deniz?
Well, I'll give a more general answer, and then a more maybe specific example. Now, mortgage interest rates obviously increased quite a bit. And actually, I was just looking at a picture on my screen. In the US, they are highest in a decade and a half, but they're still below 6%, right? So in a broadly historical view, they're still low there. And considering inflation, the real rate of borrowing is also still in the negative in some advanced economies. So with that general observation, I would also mention that in some countries, including my native Turkey, whenever there's surprise inflation and there's expectation inflation is going to remain high, some people actually see real estate as a good investment to protect the value of their assets. So we could actually continue to see strong demand in some of these countries where inflation is rising fast, but interest rates are not keeping up, if you would, increased demand for housing, even though mortgage conditions on paper would be tightening.
Thank you. Well, I'd like to close the panel by thanking the panelists. So Deniz, thanks for joining by Zoom, and we're sorry you're not here with us, but we'll be able to connect with you. And Shamika and Jonathan, it was a pleasure, and to the audience for your great participation.